Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on your screen the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. Woo, what a week. All right, let's get to the chart of the markets and talk about what's happened throughout this week. We did finish at the 10-day moving average, a little bit to the upside today. As you can see, we've rebounded off those lows from last Friday and Monday and all of the news that's come out. We had the market open big to the downside on Monday, and then the report came out that President Trump was considering a 90-day pause, and then that was released that it was, fake news, wasn't real, and the market rallied hard. We did come back down after the White House said, nope, that wasn't a real story. But we did finish well off the lows. And then a couple days later, it comes out, we are going to go into a 90-day pause. And then we have this massive rally that occurred on Wednesday. A little bit of give back yesterday, but back to the upside today. So it just creates that uncertainty of nobody knows exactly what's going on, what's going to happen in 90 days from this point in time. But the news that we had that we know is real news that came out today and yesterday was the inflationary data from both the PPI and the CPI report, both of those being just a little bit better than expected, about a tenth lower on both the CPI and the PPI. So that was good news from the inflationary standpoint, but the bond market is not really signaling that everything's okay. In fact, the bond market is the big worry. If we go back to the chart of the S&P, I'll move over to the TLT in just a moment. But at this point, the reason for the about face, or if the administration is being truthful, was already planned, that we were just going to, and I've talked about this before. I thought President Trump was using this as leverage. The U.S. is the consumption engine of the world, and he's using these tariffs as leverage. But the bond market was acting pretty squirrely, and I think there were some people that got to him and said, hey, maybe if the plan was that you were going to do the pause, maybe now is a good time. And that's what sent things back to the upside. I've talked numerous times about how you need to pay attention to the bond market. So I'm going to go ahead and switch over to the bond market real quickly, but I'll come back and we'll look at the weekly chart of the S&P because I think that's important as well. But if I switch over to TLT, I've talked about this before, TLT being the 20-year. It's been just absolutely a poster child for Elliott Wave. On the way down, we had a classic 5-wave pattern where we had the 38.2% B wave correction. Then we came down and hit that 100% extension on the wave 3, my favorite of all patterns, the zigzag within a wave 3. Then we had a 50% wave 4 correction, which yields a 100% wave 5 extension. Exactly what happened. I think if Mr. Elliott was here today, that chart would go into his book as here's exactly what I'm talking about. Well, when a wave 5 ends, you go back into a corrective phase, which allows you to march back to the previous wave 4. And that's exactly what happened on TLT. We had these two symmetrical triangles here, two of them. Oftentimes you only get one, but we had two of them back to back. We went back up towards the previous 4, and then we've come back down. So this would be considered in the world of Elliott Wave a wave 5 buy, where you have a wave 5 that ends and then you move back to the upside. You've heard me talk about in this software from hub.com, hubb.com, the AI signals that they've been releasing. And we've been sending out alerts to our subscribers using the zigzag patterns within the wave 3. But now the AI has actually released a new version that's just gone out to our founders members, or to the Hub founders members, not ours, because Elliott Wave Options, but to the founders members of Hub on these wave 5 signals. And the first one released is the wave 5 buy, which is where you would look for charts like this. And where we are at a moment in the market, and I'm going to go back to the SPY as I talked about, this move back to the upside here. This gives you an opportunity to sign up for the new wave 5 releases from AI. As I said, that it has been sent out to the founders members at the Hub organization. But if you want to get on the list, you can look at the link that's provided here on the slide that you're talking about and will be underneath this video, and get on the list to acquire these signals. So not only now are there the bullish and bearish of the wave 3, but the wave 5 now as well. So what a great opportunity. Doesn't commit you to anything, but get on the list to be one of the first ones to receive this, because the AI signals that are being sent out have a limit to the number of subscribers that are going to be sent out to it. The data scientists that the Hub organization has employed don't want everybody on the planet to be able to have these. So if you would like to at least explore more, get more information on it, click on that link there. Somebody will contact you, talk to you about it, and you can decide if it's something you're interested in. But again, by clicking up and registering, you're not committing yourself to anything other than you have maybe some interest and want more information. But that's exactly what would happen. Going back to this chart of TLT, these are the signals that we would be looking at. And as I go back to the SPY, and I mentioned that I was going to move over to the weekly chart, I think this shows that there may be a whole lot of wave 5 buy signals coming up here in the not too distant future. So I will go ahead and bring this into the point where we have 377 data points. There we are. And that gives us the weekly chart. And look where we are on the wave 4 on the weekly chart here. We're set up right at a 50% correction in the wave 4. Perhaps the selling is at least abated for now. Whether or not the bottom is in or not, we don't know. We could come down here to this next level of support, which would be right around 61.8, or we could bounce from here, because look where we are on the weekly chart on the separation from the 10-day moving average. You've heard me talk about this over and over again. No security in any time frame gets too far from the 10-day moving average for long. And you look at the weekly chart, and it's rarely been too separated from the 10-day moving average, which is the lime green line going back and back and back and back. And you can see how close it's been. Look at that. I mean, as far as we want to go in time, it's been very close. This is a extremely unusual time to have this kind of separation from the 10-day moving average. Now, we've moved back this week. We're closing the gap a bit, but you would argue, or I think you could make an argument, that perhaps the bottom's in. We may test that bottom, but perhaps it's in. And if not, maybe backing and filling from here. But that means that on all of this strong selling that we had, there's going to be a lot of wave 5 buy signals. Another reason why you would want to go to that link and sign up and find out more information about getting those AI-based signals along those lines. So that's where we look on the weekly chart of the S&P there, with the wave 4 around 50%. So I'm going to go ahead and bring this back to the daily chart. And then we'll move on. I showed you the TLT chart, but I'm going to go to TNX on the 10-year, because this is what was really upsetting a lot of people. There was something called the rate swap trade, where you have a floating rate against the fixed rate. It's a kind of a trade that a lot of people in the bond market would do, was unwinding as rates were going up so fast. And that's what brought the or at least some speculation is what brought the administration to do their pivot on the 90-day pause, maybe a little bit sooner. If you go by the fact that, yeah, it was planned and they were going to do it, it might have prompted them to do it a little bit sooner, because that can create financial problems all over the place when the big institutions are doing these swap types of trades and then they unwind. Remember when I'm going back and I was talking about when we had Yen Monday, when that yen carry trade unwound? It's a very similar thing, what was going on here on the rate swap trade. So the floating rates against the fixed rates, that trade was unwinding, and people had to sell. They had to get out of it, and that created this big spike up in rates, which was very unsettling in the bond market. But look where we are. We're at the wave 4, awfully close to disqualifying this pattern, but we're still okay for now, underneath the 78.6% fib level. So if the bond market can calm down and rates start ticking back to the downside, I think the Fed is just beside themselves on what they need to do at this point in time. There was a lot of speculation that if the administration hadn't made their pivot, then the Fed was going to have to come in and cut rates in order to save this unwinding of the trade in the bond market. But it got a little dicey there for a bit, is what I'm trying to say. But for now, maybe things settle down and we start to head back down in rates. And if we do that, then no harm, no foul, everything's okay. But the movement in the bond market certainly bears watching over the next week. And remember, next week is a shortened week because we have a holiday on Friday for Good Friday. So we're going to have a holiday shortened week next week. Going to the dollar, taking a look at the dollar, and this has been another concern. Look at that move down in the dollar. Holy cow. I did want to see the dollar in this trading range. If you've been watching these recordings, you know that between 100 and 104 is kind of where I felt the sweet spot was on the dollar. Did not want to see the dollar move down like this. That got some people's attention as well. We don't want to see the dollar break below 100. If it breaks below 100, then we go significantly lower. We don't want people to lose faith. Going back to the bond market, we know that China and Japan have been selling some of their bonds. That's been some of the reason for the movement up in rates of the selling. But those are just shots across the bow. This is the whole negotiation thing back and forth. Again, reminding you that the U.S. is the consumption engine of the world, and Japan and China, neither one of them want to upset the U.S. too much to where we stop buying their goods. But it is like, okay, if you're going to do this, here's some leverage that we have because we own a lot of your bonds and treasuries. And if we dump them all and sold them all, you're going to have a real problem. So I just think there's a whole lot of tit for tat going on right now in the global markets, and that will likely calm down. Let's take a look at the VIX as far as there's still some added volatility in the markets. I had commented during our insiders meeting last week on whether or not this spike up to 30 was enough to reverse the market. It didn't feel like it was. I felt like, oh, if we had gone up to 50, I would have felt better. Well, we even did better than that. We went up to 60 on the VIX. So there's the big spike, which says that maybe the bottom's in. Whether we test it or not is open for argument, but perhaps the bottom is in, at least for the short to intermediate term, and we are coming back down in the VIX, but we're not down to this level here at 2250. And that's even an elevated level, but coming back down there would still have some volatility priced into the market, but not the crazy wild spikes. So 60 probably was enough to put in at least a short to intermediate term bottom. Again, whether or not we test it or not, we'll have to wait and see, but pretty interesting along those lines. Now I'm going to go over to the metals. We'll take a look at gold, which has just been on fire for a number of reasons. The dollar going down generates a movement up normally in gold. And then we have all this concern about what's going on in the bond market, et cetera. It's a pretty good safe haven. Look where we went today. Big move up. We thought that GLD would go to 300. I've talked about that in recent recordings. You can go back and look at them. We felt like we were going to see 300 on GLD. It's one of those big round numbers. I talked about the tractor beam effect, where it just kind of draws things up. Didn't necessarily think it was going to be this vertical on the move up to 300, but felt like that was where we were destined to go. You can see this zigzag pattern that existed here, again, in the wave 3. My favorite pattern had 100% extension at 290. We felt like it was probably going to 161.8, which coincided with that big round number of 300. And that's where we got to today on GLD. So gold has been a good place to go. And with all of the stuff that's been going on, that's the reason for the big spike up in gold. A lot of it, again, to do with the lowering dollar or the decreasing dollar. But now we have a doji here. We've hit this big round number. Maybe we get a little bit of a break here in gold. I'm not saying that I think the move is over in gold. Just maybe we need to pull back because we're well above the 10-day moving average. So we're overbought. We hit a big round number. We hit 161.8% extension, and we have a doji. So perhaps that is going to calm for a bit next week. But when we look at SLV, we go to silver. And gosh, we talk about silver all the time during our TradeFinder meetings, and talked about it a lot in the past couple of weeks, where we've gone through and mentioned how silver needs to play catch up to gold and talking about TradeFinder. We do that every single week on Tuesdays at 1 p.m. Eastern Time. It's during market hours. If you haven't joined TradeFinder, it's free. You can use the link on your screen here or go to the website at ewotrader.com and sign up for TradeFinder. We have a great community. We look at the markets. We talk about trade ideas, and we have a live Q&A at the end. So please join TradeFinder and join us each and every week, again, during market hours. It's a great time. But going back to SLV, talked about how whether SLV needs to play catch up. It's been kind of caught up in this manufacturing thing, right? A lot of silver is used in manufacturing, especially in the technology sector. And you can see the chart is way behind what's going on in GLD. And the charts of gold and silver don't always match exactly, but they're normally very similar, even though the patterns could be slightly different. They're usually in some sort of a similar mode, but silver is way behind where gold has been. So perhaps SLV is a place to play some catch up here. If the market does calm down and we get a little calm in the tech stocks, maybe we get an outsized move on silver versus gold now as it tries to catch up and move back to the upside. So it's been kind of a highlight of our last few TradeFinder meetings. So we'll update that again next week and see where we are. But love to have you join us for those meetings. Let's move over to the energy sector. And if I move in and take a look at UNG on natural gas, we had that big move up with the bid underneath them from all these data centers that are going to be built. And then all of a sudden it was like, oh, well, with the economy the way it is, are they going to scale back on the creation of these data centers? We going to get as many as we were? They came out and said they're going to be using natural gas. That put this initial bid here. So we had this zigzag pattern up, 38.2% B wave correction up to the 61.8% extension. And then we've come back down. But that was in the wave 3. So that's the zigzag in the wave 3 that I was talking about before this new AI release on the wave 5 trades. But we have a wave 4 here that's right at 50%. And maybe we're a little bit oversold here in natural gas. If the market does calm down and those fears calm down, maybe they'll start talking about the creation of these data centers again. And we may have a potential impulsive wave 5 move to the upside. It's just going to depend on how the market acts, but with the market and the economy a little bit uncertain at this time, there's a question on whether or not some of those data centers being built are going to be put off a little bit or come back. That's really probably going to tell you whether or not we get this next move to the upside in UNG or not. USO oil, wow, oil has surprised me on this movement to the downside here. As you can see, this big move down in oil. I did feel like the trading range is here between 65 and 80. I've talked about that for weeks. If you go back and look at the previous recordings, you know that. I said I wouldn't be surprised to see it test either 80 or 65. It looked like a couple weeks ago we were headed up to test 80. And then on this move, we came down. And I think this is the area where OPEC was probably getting really close to saying, we're going to cut production. They didn't want to see this breakdown below 65. But we immediately got back up above here. And I think that creates the pause. The U.S., the drill baby drill, wants to create more domestic production. And OPEC said, yeah, we're just going to meet your increased production with cuts of our own. They do want to keep a higher price of oil in place, but they don't want to have oil so high that it strips demand and the demand goes away. And we were getting pretty close to that with the fact that if oil collapsed too far and the economy, consumers would be concerned about whether or not they should be traveling or not. We're about to enter the travel season, peak travel season. I think that's probably a good thing to see that oil has come down. That probably keeps people with their summer vacation plans on driving, that it's a little more pleasant at the gas pump now. So I think the timing of this is pretty good, which makes me feel like the bottom's probably in. I think the demand will come up as we move into the summertime, and that probably keeps the bottom right here around 65. So those are my thoughts on going through energy. Let's take a look at some of the rest of the U.S. markets. These charts are going to look very similar as we go to the chart of the Dow, as evidenced by the DIA. Again, you see this downward move, wave 3 to the downside. We've moved up. We closed above the 10-day moving average here on the DIA, closed right at it on the SPY, as you saw. But these charts are all pretty similar. We had these extreme lows on Monday, and then we rallied back on everything that I've already talked to you about. Now the question is, are we going up to make a wave 4? And do we have a test of those wave 3 lows? And a test of the lows can be just a little bit lower. So maybe we come back down and have a wave 5 lower than that. There's still a chance that these charts relabel. But at this point, maybe we're going through the wave 4 bounces, and then we'll see what happens from that point in time. As we move over to the Qs, you take a look at the Qs, and then you can see also closing above the 10-day moving average, even in the face of what's going on in the bond market, which I think is pretty interesting, which seems to me to feel like people are willing to step into the tech sector, even with the bond market acting the way it's been, and perhaps some of the scare from the bond market has abated. Otherwise, you wouldn't see these kind of bids in anything tech heavy, but enough to create a move back above the 10-day moving average on the Qs. Also, very similar pattern to the SPY and the DIA with this wave 3. And perhaps we get a continued bounce here. We had some separation between the 10 and 50-day moving averages. Those don't separate too far either. You can go back and look. Here's an explanation of what I'm talking about there. You can see how the 10-day, the lime green line, and the 50-day, which is the royal blue line, they separate, but not significantly so. And anytime you get a little bit of separation, they come back down, just like an equity or a security moving away from the 10-day moving average. And so then when we come back over here, we got a point where we had a little more separation than normal between the 10 and the 50-day, which again tells you on a shorter term basis, maybe we get just a little bit more bounce at the beginning of the week. And then we'll have to wait and see, because gosh, with a holiday weekend, 3 days coming up on the weekend next week, what are traders going to do? 3 days, who knows what kind of tweets will come out over a 3-day time frame. So the end of next week, Wednesday and Thursday, are going to be really interesting to see how the market trades. I feel like maybe the bounce continues at the beginning of the week, but I'm not so sure about the end of the week as far as position squaring is likely to occur going into a long holiday weekend. Then if we go to the IWM, the one market that's really been acting in concert with the bond market, but notice that it also has a wave 3 to the downside here, also has a separation between the 10 and the 50 days. Those are arrows that I drew last night at our insighting for subscribers only at ewotrader.com. So same type of thing here. If the bond market's going to calm down, maybe we get a little bit in the IWM, but notice it's the one market that did not close at or above its 10-day moving average today, still closing below the 10-day moving average. So still being a little susceptible to these higher rates. So it's going to need the bond market to calm down and continue to calm down for it to continue higher. So we'll see what happens over the weekend, the beginning of next week. But pretty good separation there between the 10 and the 50. In fact, you could argue, if you do believe that, all right, the scare from the bond market is over and we're going to settle down, this could be a place to find a pretty good bounce on the IWM, coming back up at least to this level of 200, which would act as resistance. It was support back here in March and early April. We broke below it. That'll be tested as far as, is that now resistance? So that could be a place to look. If you do believe that the scare is over in the bond market, it'd be pretty interesting to see how that plays out next week as well. It's going to certainly be on my radar screen as a potential bullish trade. All right, moving to some stocks of interest here. The common ones that you all ask about, we'll try to cover as many of those as possible. And as a reminder, I talked to you about the software at hub.com, and the Wave 5 signals that are released. If you're interested in those AI signals, that link that was put underneath the video. But as a reminder, if you make a comment underneath these videos, we are giving away one of our level 3 subscriptions every single month of this year. All you have to do is leave a comment and you're registered for the drawing. That includes our sideways time strategy, which has been working really well. We've had some really short-term time strategies. They usually need to take a little longer. They're more income-based, but with the high volatility in a calendar spread, selling a short-term option against a long-term option, with the volatility coming back down, they've worked really well. Our volatility strategy, which looks for breakouts of triangles, and the AI-based impulse strategy, which is the one I just mentioned, just got expanded from having AI signals for zigzags within a wave 3 to adding in the wave 5s. So just leave a comment underneath this video and you're in the drawing. Now, that's not the same thing as the software, so you still want to make sure you register for getting more information on the AI signals within the Hub software. About PLTR, we're moving back to the upside here. We had this wave 4. I hate when the wave 4s are one day, but that was the big downward move, was a great opportunity to buy. It was on NVIDIA as well, but we're back above the 10-day moving average. We're hanging in here, and look where we can go. There is some room to the upside. There's some clean air here. Now, an argument would be, yeah, but you've got these lower highs, and you could draw a line there, or you could go to the extreme high and draw a line this way. Trend lines are open to interpretation, I think. Some of you in the past have said, I don't agree with where you draw the trend lines. I don't think it's an exact science. I think you just want to look at the generalities of that. But regardless, it looks like if the bond market calms down and rates calm down, we're in a position here where we've tested this 10-day moving average 3 straight days and closed above it all 3 days, that we could have a bit of a bounce here on PLTR. It seems to be set for a bounce more than some of the other charts that you may want to look at. So the wave 4 was down at 50%, but being back above 10%, this could be a good one early in the week. Again, if the bond market stays calm, that's key. You got to watch the bond market. So here's NVIDIA, and people were saying, oh, if I could get NVIDIA down to 100 again, I'd be a buyer. Well, you had a chance to get NVIDIA at 85. How many people jumped in? Here's another one of those wave 5 trades that I talked about with the software and the AI creating new wave 5 signals. This is exactly what it's looking for, a move back to the upside in NVIDIA. So if you're wondering if it was a good time to buy NVIDIA, the AI signals would have told you, yes, we're bouncing likely off this wave 5 back to the previous 4. So there's a good chance that maybe we continue this move up in NVIDIA up towards the 120 level here. As I said, I just want to keep reiterating this. All this is subject to the bond market calming down and not creating more fear, because the bond market is larger than the equities market. And when the bond market acts squirrely, it does affect equities. So all these things that I'm talking about are contingent on the fact that the bond market has passed its point of, oh, things are getting really dicey now, and is going to calm down a bit. Looking at Apple, staying in the tech sector. A lot of people asking, what's up with Apple? Well, they had so many negative headlines that came out of Apple. I've talked about this as the one stock that I'm afraid to short, even though it had a very classic, perfectly set up zigzag to the downside in this wave 3 with a B right at 38.2. You go down to 61.8. If you have an extended level, you go to the next level at 100. It almost went to 161.8. So we got kind of oversold there. We closed back exactly on the 10-day moving average. Apple has so much money, and I do think that that could be another place to look for perhaps a continuation on the bounce, at least up to test this A wave low here. So that would be around 210 on Apple. Again, assuming that everything calms down. AMD, which people used to ask about all the time, and now recently have started asking about it again. Here you go again. What's the AI saying about this? Is this a wave 5 buy? So you can see the timing of the data scientists releasing this AI stuff. You want to be a part of it. So make sure you register for that. Is AMD going to bounce all the way back up towards this wave 4? It might It had an extended wave 5 to the downside. It got right in the tap box here, time and price projection. And a wave 5 trade is when you look for the wave 5 to end and a bounce back to the upside. AMD could be a good one as well because it's underperformed everything else. And maybe this is a place where people go. When market rotation occurs, money looks for sectors that are doing well, but where are the underperforming? Where's the good stocks or the good companies with a good solid balance sheet, but have been underperforming from a technical standpoint? That's where rotation goes. AMD could benefit from some of that as far as a potential move up, at least to the 50-day moving average. If we don't move all the way back up to 120, that could be interesting. And then you ask about MicroStrategy. Some of you ask about it. This is a proxy for the crypto world, and crypto is held in pretty darn well through all of this because it's viewed as an alternative if the dollar does happen to collapse. That cryptos could be the saving grace and alternative, which is why you haven't seen a bigger downward move. And if you don't want to pay $80,000 for Bitcoin, you can look at MicroStrategy, which has leveraged their entire company against cryptos. And we got back above the 10-day moving average and closed exactly at the 50-day moving average here on MicroStrategy. So we held the lows there, tested it 3 times. So those of you that may have seen the M or W, where we talk about multiple tests of the low, holding it for a 3rd time here. My mentor used to tell me 3rd time's the charm. If you test a resistance point or support level on the 3rd chance, what happens then tends to continue in the near future. So going on that, which is one of the things he said, that was the 3rd test. So you would think that likely a continued bid in the crypto space, and then perhaps MicroStrategy continues higher. If we can get above this 10-day moving average, we have a little tiny bit of resistance here, but we could come all the way back to this midpoint here at 400 on MicroStrategy if the crypto space continues. So another good-looking potential here, especially bouncing off that support for the 3rd time. I think you could dip your toes into MicroStrategy if you're interested in a crypto play. And then looking at Microsoft here, we have the movement off that wave 5. Another one, gosh, the timing that the hub organization on these wave 5 buy trades couldn't have been better. You would have seen this potential here to move up. We're almost back to the previous wave 4 on Microsoft. So we're going to have to wait and see what happens once we get there, which could happen early. We're right at the 50-day moving average, but we've almost recovered what needs to happen. Microsoft had all its negative news geopolitically and from a regulatory standpoint, just like Apple. And maybe we're done with that, and we can move back up here, up towards that 50-day moving average. Going to give you a bonus one here on the Nifty for the market over in India. You can see here on the Nifty, we have perhaps bottomed on this wave 5 here at 124%. We got in the lower end almost to the very bottom of the tap box. So that tells you, especially when we were oversold there, that maybe that's the end of it. We had that bounce up. It was a wave 4. That's gone away, so we have to pay attention to that. But the test here, there's 3 ways you test a bottom. You come down exactly to the point of the bottom. You bottom just a little bit above the previous low, or you come down and just barely take out the low and go back up. Those are the 3 ways bottoms are tested. So maybe we're done testing the Nifty here in India, and perhaps we can turn and head back to the upside since we've posted a higher low there. That'll be interesting to watch over the next couple of weeks as well. And look at this as far as a wave 5 buy. Now, the wave 5 went more than 100%, so we're not looking for a move all the way back to the previous 4 here. You would just be looking for a move back to the 61.8% level. So if I draw this fib retracement here, that would give you a move right up here to where that wave 4 was. So we should go back and test these highs here where the 61.8% level is. So maybe a little bit more move to the upside on the Nifty, but we can't get too excited unless we can break above that 61.8% level. If we break above it, then perhaps we're heading all the way back up here and retracing the entire wave 5, but that's a ways off. So maybe a little bit more to the upside here on the Nifty before we figure things out from there. So let's see if the weekend stays calm. We don't get any crazy news that comes out. And if not, I think the beginning of the week starts the way I've talked about. Not so sure about the end of the week. So make sure you watch our recording next weekend and see how things closed on Thursday as we go into the holiday weekend. Have a great weekend this weekend. Thanks for tuning in as always. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.